The market gets hit about 5%. We've had a huge amount of volatility and we've
and impulsive, and even though this has come back a bit deep here, still a bit corrective in nature. So it is having that impulsive move up and then more of that sideways sort of move there. So, but this has stayed pretty firm here. I mean, every time it's had a bit of a breather, it's literally just gone sideways, Chris, as well. So not so much, it's probably broken the 10-day a few times here, and the 20 as well, but it has sort of gone sort of sideways in its nature there. So starting to see a bit more sideways action here again here, but yeah. The only thing I will say here, Chris, sometimes when you sort of see these names really push up there, is that at some stage they get a long way away from the 50-day moving average. And I think we've seen there with particularly the tech stocks there, we saw that was sort of like the 360 and stuff there. And I even sort of ran back to sort of afterpay sort of days as well. But once they get 30-40% away from the 50-day moving average, that should be sort of putting you on high alert for, because they're really getting extended. I know that momentum can keep going here, but once they get so far away from the 50-day moving average, like from a percentage point of view, I mean, that's the 50's at $18 here, and we're currently $27, $28. So that's a fair swing. That's $10 there. That's that's around about 40% there. So that should, you don't see that very often, but when you do see those strongest names get that far away, that should be telling you to really be tightening up here. So if anyone's lucky enough to be long the stock, I'm certainly not. I did trade this one here, but I traded out a long time ago. But if you are lucky, just keep that in mind when you get that far away from the moving averages there, you really do need to sort of look to be tightening up there.
Well, there's a perfect example, October 25, where it was sort of the 50-day moving average was $6.50, $7, and the share price was 100% away from that. So, or was it, $7.30, and the share price was what, $15. So $15.30. So more than 100% away. That's a good example of showing it just got parabolic, and then gravity helps bring it back towards the 50-day.
Yeah, I mean, that obviously the price. Yeah, I mean, that sort of shows you, you're sort of like a 50%, almost 50% drop for the 50-day. So that's that. I think once it starts getting above 40, that's sort of that should be sort of telling you that that maybe you're getting into that, really
selling into heat, tightening up with stops, 2-day swing low, that kind of thing.
Yeah, look, you got to follow the stuff there. So whatever your rules are, to sort of stay with it. But that should be one. I think I know Minabini. He's not one of the guys who sort of holds on there. I think sort of Jim Ropel and David Ryan will probably hang on a bit later. But I know that's what David Ryan does. He just he might sell 10% and sells 10%, sell 10%. So he'll sort of stay with it, but he just starts selling,
lighten the load the whole way up.
Yeah, small pieces, and he might even hold a tiny piece on the pullback as well until it breaks his moving average or something as well. So, but yeah, it did different.
It's definitely a good example of momentum in this market. But yeah, I think EchoIQ is next on your list. Okay.
Yeah, so this is interesting there, just from the moving average point of view. So we're seeing here that, like, it's again, we talked about the strongest names will sort of hug that 10, and then the kind of medium or 3/4 pace will be probably hug this sort of 20 there. But you can sort of see here again, this hug the 10 here. So, potentially this day might have got you out if you're an intraday holder, or if you're an end of day, then you might have waited till it closed below there. If you don't put your stops in the market and stuff like that. But you can see here, it did just come back to the 20 in that little three-way manner and held up pretty well there. And the whole thing just tightened up in here as well. So, and again, we're probably looking at, yes, you can have the 1 day selling here, but you don't sort of see too much selling for the follow on there, but they can sort of go again. So you can see this has sort of hugged the, even though this has gone to a new high up here, you see here that's gone 3 days on its side there. And it's sort of holding that 10 again. So it does remain in a pretty strong position there. And that's kind of a smaller price there. This would sort of meet my criteria there, but I think, coming back through that level there, even that's another potential entry as well. And then, the whole thing tightens up pretty much held the 10 all the way through here as well. So, yeah, that's pretty interesting. I think it's for the one. This one here was doing something similar there, but it just looks to be sort of fading there. It hasn't sort of held the MAs, but
able to stay in the top half of that breakout, so that's positive.
yeah. But the EIQ, they can see how that just held all the moving averages well. This one's, maybe broke one or two here. So, but we're not seeing selling here. We're sort of a little bit selling the first one, but it's definitely worth keeping an eye on that one. But just because the volume's pretty reduced there, and we know that when they have big moves and they tie up again, they can go again like that. Like the EIQ did, so we can see another leg there. So it's interesting there. MI6 was one of the other names there. It sort of did have that nice VCP we talked about, but it really kind of gapped up. So, it's a tough one whether you chase that sort of gap or not. That's still sort of firm here, but just closing below the 10-day moving average today, which is, if you are trading those stronger names, you do got to run. Follow those moving averages there pretty closely. CBE is a bit of a smaller name, but has held the trend here so far. Probably held that sort of 20 along the move here. So still not too much sort of aggressive selling here yet. So just one to watch, but probably too small for me. FRS, that's really sort of hugged those sort of moving averages as well. So I know we've broken through. Did have the classic sort of cup and handle there. Someone referred to this move. I'll have to find it actually for next week there, but they had a certain name for this, and I thought, that's a cool name. But that sort of sideways sort of shuffle under the high. But yeah, you can see that's, stay nice and tight there and broken through that sort of handle there. But it has continued on pretty nicely there. It's still pretty constructive. Even through here, I mean, I know we're down today here, but there's still not a lot of selling going on here yet. So, there's still got momentum. Even though it looks a bit extended here, we still don't know how far these things can go here, but price action still looks pretty positive there. I think VMM was another one there. That's probably first sign of negativity today. You did see a little bit of selling there for a couple of days off the high there, but today's probably the first negative day for it. WIA, a little bit messy here. Has gone to a new high here, but yeah, just probably one of those ones to watch there. You probably wouldn't want to see it close back below that prior high there, Chris. Once if they do break out to new highs like that, you don't want to, you want to see them kick on and not really come back. You have a little one-day throwback, but you really want to be, you would not want to see that close below 54 cents there. On that case there, I think SG, I think I'm actually covering
Credit as well, eh?
Yeah, covering some of the requests by accident.
Yeah.
Right. But DTR was the one actually that we did like there actually the last couple of weeks there, just because it's sort of, even though it's a little loose there, we know that when we have those big moves, when they sort of go up 100, 200, 300% moves, they will sort of pull back and then they're sort of set up there. And the first sign here was a little B-wave break here back on the 7th of January there. So it did sort of come out of there. So that did have a nice little run from there, but the whole thing's pulled back again, tightened up. So it's had another little B-wave break in here on the 24th of February there. I think we sort of mentioned that last week. So this still looks pretty interesting to me. It's still tightening up here. So it's definitely one to keep an eye on here just because it's had that amazing run here. It might just be tightening up. I mean, sometimes these consolidation phases can last, 3, 5, 7 months there. So we could be in for a longer consolidation there, but definitely pretty constructive here so far. That's probably the beauty, Chris, of sort of like when you do trade these type of moves, the pros will trade some into heat, then they'll sort of run the rest with a moving average, and then if it crosses over, then they're out. So you just don't know whether this is going to be a big move or a medium move or potentially maybe a smaller move like this one. So, but if you do get that run and jump and you sell, like Kalamagi will be selling some in like day 3, day 4, he's probably selling a third. and then he's moving the rest to a break even. And then he starts to use the moving average once it sort of starts to move higher there. So again, you just don't know if you're going to get the big move or you're going to get a medium move or the small move. And this is, if you follow that trading in the zone there, what you've got to do is just follow the same process every time, because you don't know what lies ahead. So, our ego gets on the road sometimes and think this is going to be a big move, and sometimes it doesn't. So you have a really good setup, and then you can come back, and then if you don't take anything off, then it mightn't sort of suit it. But look, it's all, everyone's got their own profile how they trade there. But if you're a home run trader, no, you stay with the whole lot, and then you get knocked out at break even. But there is sort of something that the fact that the professionals do tend to take some off into heat.
It does say a lot.
Does suggest that's a good strategy, and then sort of get to break even pretty quickly as well is definitely a consistent strategy with the greats, and then being able to stay with a large part of the trade with a predetermined sort of stop or a moving average or stuff there, so that you can capture the trade there. Those are probably the three consistencies there. So you can alter those independently. You can take a bit more off or a bit less on the heat. You can be slower or faster to get to break even, and then you determine how you're going to trail that, as well. Whether you use a moving average, whether you use last one low, whether you use a trailing percentage. There's all sorts of methods there, but those are the three things that are consistent with all the best traders. They all do some variation of those three principles. So,
well, on that, what you're talking about there is sort of trade management, system management. That I've found over my experience of working with so many retail traders, that is the greatest change to their performance, to going from an average amateur trader that's hit and miss and trading with the bull and bearish moves of the market to actually becoming a consistently profitable trader. Those changes that you're talking about are the key change. And that's something, actually, a trader you and I know, Joe, we talked about last week, and we'll be having another conversation again next week, specifically about how the trading journal highlights how to make these small adjustments. And these small adjustments only seem really tiny, but it can be the difference of a trader being plus or minus 5 or 10% to then quickly advancing to plus 30% within a year. But it's all those things that you're saying, just quickly getting to break even, taking some profit off the table because you might be wrong. And if somebody looks back over the last 1 or 2 years worth of their trades and applies those tweaks to the system, it's amazing to see what the performance differences can be. So what you've talked about is actually, for most people who are watching, I dare say that's going to be actually the most valuable thing they can do with their trading. Obviously not personal advice, go see a professional advisor. But how do you find that helps your trading, Gary?
Yeah, I mean, it sounds weird. I was just talking to a trader about this yesterday. Is that I've sort of been, I feel like I've been trying to over tweak it recently, like to the point where, so I've sort of been wrestling with, say, 2.5 to 3.5 times my risk into heat, and then whether it's a strong market or a mild market as to how I trade it, and then each portion I take off multiple as well. And I've worked on those principles that I do try and take some into heat, just trying to find the right multiple. So I've been trying to tweak that a little bit. And the second one's pretty consistent. Once I've sort of got a certain amount of profit achieved, or basically the stock moves, so stock moves, say, 3 times my risk, then I should go to break even. I should basically move the whole lot to breaking even. And then,
you say, you don't want to go home a loser in that scenario.
No. So if you're up sort of 3 units there, you sort of risk there, then that's a pretty good gain. You shouldn't be going home. Yeah, so you can go back there. That goes back to my old days of sort of when I used to sort of be, it was like 1/3 was stopped out at -1, 1/3 we stopped out at 0, and then I used to have a system there where I used to clock out at 3. So so I had +1 and +3 as my 2 alternative profits. So I found that sort of 1/3 of my trades were +1, +3, which ended up being +2 on average. a third at 0 and a third at -1. That's a still profitable system.
Oh, yeah. That's what high frequency traders know, right? They just do more and more and more of that.
Yeah. But then now trying to be with momentum trading there, there's an avenue there. I mean, look at that move in front of us there. That's a monster move. So if you want to get a monster profit, like these gurus, like Minervini and Kalamagi and those sort of guys there, you need a mechanism to sort of stay in the trade. So yeah, you want to sort of take some off, de-risk the trade a little bit, get the stop to break even as fast as you can, but then try and stay with it for as long as you can. So that's been probably the hardest thing for me is not, I put stops in easy. I get to break even easy. Trading out the multiples of that's the hardest part for me is like, once I've sort of taken some off, then I'm like, oh, now I'm up 5 or 6 or 8 times. Oh, maybe I should take some more off. And that's where the gray in my trading becomes. So that's what I've been trying to tweak that a little bit, trying to sort of like determine if I'm in a really strong market, then it should be at a higher function. And if it's a weaker market, it should get a lower function of that. So just trying to have 2 functions rather than 3 or 4 different, because the more complex you make,
And it's harder. Magnitude's harder.
Yeah, you really I've really sort of like I feel like I overcomplicated my plan there a few months ago, and I just it's just too much going on. I'm checking numbers and spreadsheets, and yeah, it's just there's a lot of work in that, and so it should be easier. So that's the one advice I can probably give personally after toiling around for 4 or 5 years on my plan is that just keep it more simple. And I think maybe stick with it for a bit longer as well. I follow it 3 months. I think, oh, I could have got a bit more. So then I want to tweak it a bit more, and then I tweak it too far, and I thought, oh, I could have got a bit less. But maybe just sometimes if you've got a good system, maybe just I've had some good systems over the years, and I've gone away from them, and then a year or two realized, yeah, it was a good system. I don't know why I stopped doing that, So, but we're always trying to investigate. We're always curious, and always trying to tweak it and improve it. But yeah, so never stop trying to get better. But sometimes if you've got a good simple system there, it's easy to follow. And I think that's the thing of it. If you don't overcomplicate it, yeah. So that's the way. Last one here was a bit of a cup and handle on the BXN, just sort of forming at the moment. They were gone back to retest the highest. So just interesting to sort of see whether this can consolidate here or not. There's some good volume into the high. Just the only thing that worries me a little bit is that you see the volume spike at the high. So I prefer to see some good volume bars running up here. I don't want to see the volume come in late, because that can kind of be the, as the retail money is coming in here late, that can be the smart money getting out into that heat as well. So, but this is probably a watch here. See, maybe this can form a handle here, but too small for me. But yeah, just one to watch anyway. That's it from the
in the top quarterly momentum. Yeah. So we go to the weekly launch pad. So these are the companies that are emerging in momentum. They haven't yet set up there. But all the companies that we just looked at, they all showed up in the launch pad first. And now we just need to filter through to find the opportunities that we put on our watch list to hopefully trade. So what's the first one out of the launchpad list, Gary?
Yeah, number 2's the XYZ there. So the block there. So it's it had a big jump there, obviously on earnings and stuff here. So yeah, there's a lot of companies reporting at the moment having big jumps up and big jumps back and stuff there. So we're definitely seeing a lot of heightened volatility. I mean, you got companies like CBA, Telstra, Woolworths jumping 10 or 15% 2 or 3 days. That's telling you the market's pretty volatile, because they normally don't move that in a year, yet they're moving out in a few days here. So we're seeing some of these growth names having some pretty big jumps up and down here. So that's definitely adding to some volatility there. So this is probably a bit of a watch there. You'd probably like to sort of see this consolidate, tighten up here, but saying that, it's not the type of market where we're seeing too much of that. It's pretty loose out there. So as Kalamagi says, loose is for losers. So we want to basically wait for that sign of strength and things to tighten up. MFG was sort of another one that's jumped here. It's pretty interesting, actually, MFG. I mean, that's sounds funny, but doing that little merge with Barrenjoey is probably that takes a bit of uncertainty out of the MFG as well, because sort of it's lacked a little bit of maybe leadership there since Hamish got himself into trouble. So it's it's had a little bit of money leaving the system. I think with Baron J.
A bit of bleeding.
Yeah. So Baron very behind it, sort of makes it a little bit different. So definitely got to keep an eye on this one here, because that's kind of what I would refer as game changing news. So yeah, it's got a little bit of it's got a lot of overhead here, but saying that, it's pretty much gone sideways now for the last 3 years. So it's probably weeded out a lot of these sellers over the last few years, because it's been really been down.
Yeah.
Yeah, it's been down here. So go back to September 22. So yeah, we're 3.5 years really. So that's probably enough time to weed out those sellers. That's why sometimes if you've been down here the last 12 months, the next 6 months is going to be tough going. You need time to weed out here, but this is definitely one to keep an eye on there, because that's I reckon that's a significant news there for that company there. What have we got there? NVA. There's a bit of a VCP they're setting up there, Chris, but it's a little loose. It's not, it's not a tight sort of pattern there. But the good news is that the pattern is tightening up. So obviously we had a big first drop, stayed in the top half. Second big drop, still stayed in the top half. We got a third drop here. So this is sort of tightening up again here. So definitely one to keep an eye on. Love to see this tighten up even more, but it's a little looser than you'd love. You'd prefer to sort of see them stay tighter there. But
just on that, actually, that's probably a good point to say. There is a whole quiz if somebody wants to really learn and test their knowledge of VCP. We'll put a link to that in the bottom. And then there's also 10 marked up charts of VCP if people want to put that knowledge to the test and really refine that. So as you're looking at that, is it ticking enough boxes for you now, or it just stays on the watch list?
Yeah, it stays on the watch list there. For me, I'd probably have to investigate what's happening there as well. Probably start to read about companies doing it. Is there any sort of because you see the volume has really started to dry up here, which is what you want to sort of see when you start to, the whole thing sort of tightening up here. You want to see that volume sort of come off here. So yeah, I mean, you got to wait for your rules there. So I mean, I'm probably waiting for the little B wave break, but the more this contracts, then that B wave gets hopefully lower and lower and lower. So maybe if we get another contraction even lower, we get a lower B wave, so we get a lower potential entry. But at some stage, it's got to contract and come through and then burst. But definitely one to keep an eye on that. Just probably not the ideal, because it's a little big, that pattern, and you normally sort of the higher probabilities with the tighter patterns, not with the looser patterns there. But they can still work there over time if they continue to tighten up there. NVA there. So we've got Nano, I thought was sort of interesting, the WBT as well.
Your request on that one too.
Yeah. I mean, look, it's a pretty strong trend. I know it's below the 50 at the moment, but it really has just sort of come back at an A, B, C, like a 3-wave correction as well. So now you've sort of got to watch this. I mean, that's a potential undercut in the top half, Chris. That actually meets one of my trade criteria. So I look for the stronger names for them to sort of come back and undercut there. And then, I know sort of like, what's his Matt Goosell and stuff there. He talks about this sort of EMA. So once that breaks above here, he's looking for to try and let this consolidate for 3 days, and he might try and enter there. So that's a trade setup that people do look for, is that little ABC, the undercut, staying in the top half there. So this would be nice if this tightens up here, but definitely one to watch there, because the trend's still pretty strong here. And look, even though it's under the 50, that's probably a small negative. But we know that these stronger names, they can recover again. So yeah, what you probably like to sort of see here is maybe tighten up here, and then maybe come through, break above a swing high as well. So, but yeah, if you saw the volume, then you get a little pen or a flag, something like this. If you get a little flag formation like this, or something tight like this as well, would be nice. If you sort of saw that and a volume dry out there. And then the key there is, like with anything, Chris, is to get a low risk entry. So if you got sort of 4 or 5 price bars there, and then you get like an inside range, you could buy the range break with a stop underneath that range. Therefore, you're not risking much. So I love taking trades there where I'm maybe risking half or a quarter what I normally would be prepared to risk based on the trade, So, that's, so that's sort of something to keep an eye on there. That's what you might want to see there. We've got JLL was the other one I thought was interesting there. Bit of a VCP on here. We got was seen here. There's got a history of VCPs there, really. Had a VCP in here, whole thing tightened up, did break up here and then didn't go on with it, ended up breaking down, but then it did break up again, but was pretty choppy. This is a bigger VCP in here, but the whole thing is tightening up here now. So, not ideal there, but I mean, the thing about this trend, Chris, is that we've just got a series of high lows still through the whole thing. So even though it's a little loose here at the end, it is now tightening up in a tight manner here. So, if this were to come through a little B wave there, definitely one to keep an eye on there. There was a bit of selling through here. That's the only negative I said. I don't really like that was sort of heavy selling. There was more heavy selling through here, but then the selling sort of dried up here. So it's often the way you get the first leg heavy selling here, medium selling, and then low selling, and then it can come through. But that's probably not. There's probably a little bit more selling in there than you'd probably like to see. But no, I've seen them not be ideal and still work pretty well. So, as we know, what else we got there? ILA, I thought was
Island Farmer.
Yeah, so again, that's been pretty strong. Some good volume profile in that drive. So we can see here, look at the volume all the way through. It's been pretty robust. And then this has had a bit of a pullback here, so it's come back a bit, but not really, not a lot of selling going on here so far. It's definitely stayed in the top half here so far. So what we do have here is so far we just have swing. We haven't had a lower high being broken there. So we've sort of got lower high, lower high, lower high. So we're still trending down here, but it is sort of hanging on there. So definitely one just to sort of keep an eye on there because so far it's staying in the top half, and just got to watch that congestion there. It's a little bit gappy. So my guess is probably not that liquid. But yeah, let's watch that.
This finally getting a lot of requests. This has been popular.
Well, this looks right here. I mean, it's sort of like this was the IPO, which you want to learn IPO trades. It's sort of look at how this came out of the IPO. So again, typically they come on. I think with the IPO price was they come on hot. Everyone gets excited about IPOs, then they tend to fade, and then they start to build out of the IPO base here. So this did build here, and then ingested again, and then built again, and started running here. Had a decent sized drawdown in here. It's at 340 down to 210 or something, to 215. So pretty sizable draw.
Iris tells me the IPO was $1.56.
$1.56, yeah. I think what Iris
tells me, yeah.
Yeah, that little spec there, that must be it there. But yeah, that's often the blueprint for IPOs and stuff, or the good ones. Obviously, the bad ones just tend to go down and down and down, never really get going. But
we all know what the bad ones look like.
Yeah. But I mean, this is a pretty strong move here, but it has had a pretty decent drawdown again. So 540 back down to 330. So it has sort of set up again here. So I did notice this one now. I look for that, I really want to see like a swing high get broken there. So I know that was an interesting sort of day there, but you want to sort of start to break high and lows there. So it did, there's that classic, we talked about this, actually a couple of viewers actually reached out about this, was that D wave break followed by the retest of the 20-day moving average. So there's one right there. So that's obviously come through, broken above this little swing high, this little swing high. So basically broken above a couple of swing highs here. Then it comes back and sits on the 20 or the 10 here. So basically the body set on the 20, but the 10 got retested there. And then it's built there again. That's sort of something which I've been thinking about that quite a lot, actually. I mean, just because the beauty of that is that, oftentimes we're normally, as momentum traders, we're normally buying breakouts. So we tend to buy with momentum. And then this, the last 3 or 4 months, Chris, I was getting it chopped up. So you buy into that heat, and then you might get a short-term move and then a reaction back and then chopped out. So Whereas if you wait for the chop back, the entry is a bit lower than buying into heat, and then you get you sort of avoid that short term volatility. And then if you fail, like plenty, I keep failing here, but if it does succeed there, you have got a pretty low risk entry. So maybe your risk is going to be lighter, right? That's an attraction for me personally. So I love risking less than 1% of my account, because if you have like 4 or 5 losses in a row and you risk 1%, it hurts. So it's okay getting 4 or 5 winners in a row where you might make 3 or 5 times your risk. That's all nice. But it comes with the territory. But if you can reduce that risk, say you get it down to say half of that, and you feel like you can kind of take twice as many trades or the same amount of risk. So that's the beauty of that little retest of that. Yeah, so
Well, I'd love to know the data on it, but it's a bit like reading Bill Kulski's books. I know you've read them, I've read them. And when those throwbacks occur, if the throwbacks already occurred and it's out of the way, then quite often it feels like it can be a faster acceleration and climb, which this is a good example of. It doesn't always happen like that, but I have that kind of confidence. If the breakout sort of goes but doesn't get a huge amount of conviction, has a throwback to the breakout point or the 20-day moving averages, you're saying, which is probably more valid. I don't know. I'd love to see the data.
It's a tricky one there, Chris, because I thought about maybe, because I like to sort of scale into a trade. So do you add 5 on the break and then add another 5 on the pullback? But that goes against my mantra of actually adding
on the way out.
Yeah. So that's why, and then the strongest names like, the Teslas and the Nvidias and, the 360s, once they break those D-waves, they don't often come, not all of them.
No, it is still going. There's gap, the spacing and
So it's there. So do you add to a losing position? That sort of goes against, So
I mean, even he says no, right? Yeah. But maybe it means that if it does retest, touch the 20-day moving average, then the second tranche of buy, the second purchase, you might actually do that earlier than normal because it has created that he's retested the low, the 20-day moving average, and then created a higher swing low, which then means that you could possibly move your stop up there more quickly and then add into the new position sooner. Getting quite technical and nuanced on these launchpad companies.
Yeah, that's right. I'll skip to the next one here. It's good. It's interesting, eh?
You get an insight into what Gary and I talk about before and after recording.
Yeah. But AUE was another one there. Sort of the whole thing's sort of tightening up here at the moment. But yeah, it's a little choppy, this stock here. But look, it has showed relative strength so far. So probably just stays on the watch list. And last one there was obviously Karoon. There is obviously the Middle East conflict is helping this one there. We got to buy back on as well, this stock as well. So I haven't sort of stopped buying back their shares just because they've sort of jumped up a bit here. But yeah, this, the longer term structure there, it's been pretty volatile, this sort of, this stock here, not just because of the Middle East stuff. It was volatile before that. So it does have a bit of a high beta. So I've found it tricky trading this one personally, just because it's not really had that sort of like, if you look at that move out of April, had nice rallies and short corrective type of setups there. Like, look at that. That's a nice little tight, 3 days under the high there, nice and tight there. That's a good sort of setup. Whereas, look how volatile this is. It's up and down, up and down. It's been loose there. So Kalamagi would say, no, this is not really, it's too loose for him, so you want to see that shallow strength and nice and tight there. So, so I think I saw one actually there. I thought this was interesting, Bruce, as well. That had a really strong move. It's had a decent pullback, stay in the top half. Had
a nice tight consolidation on.
Yeah, so the whole thing's tightening up here now as well. So it's really, really tightening up. So this is definitely one. I know it's you'd probably like to sort of, hold the 50 here, but it's probably not that important. You just want to sort of see it hold up here. But, but this sort of, where a break above that 78 there, I'm definitely watching this one pretty closely there. But it is in that that sort of gold space there as well. So, but yeah, that looks sort of solid. There's a few, there's a real mixed bag in the golds. I know sort of, some of them look pretty good. Some of them are sort of held up pretty well. I think like Evolution and Silver Star, you might have held up pretty well. But whereas, the CMM has actually been pretty weak here. And there's been a couple actually that are sort of pretty weak as well. So definitely seeing a bit like the oil sector too, like Beach has been pretty weak, while Woodside and Santos have been really strong. So, so you got to decipher through your companies there. Make sure you trade in the strongest ones.
You've brought another one in, but I'll throw a question to you, which is on the foldback technique on RAC, so I think Race Oncology. The question, so Gary's covered the foldback technique. Is this, so if we're looking at sort of the midpoint of January being the low of that pullback, if that's sort of like the centerfold line of it, is this a viable candidate now that it's sort of broken through almost an inverted head and shoulders, that it could have a rapid succession up towards $3? Is that kind of fallback technique I'm learning here, everyone? So, Gary, you okay this?
Well, it's still, I think it's too young to actually sort of say that, because, I mean, the key thing there is that's the last swing low. And so far we've rallied
to it.
And stayed under it. So we really need to get back above that level to get back into positive shape for this company. So I actually have been watching this. It's actually on my watch list at the moment. Because I noticed that that was the first little lower high broken there, was in here, but it didn't follow through. It came back to the moving average, came back below the 20, but then it's bounced again. So it's definitely a watch here, but I would like to see it. Sometimes, like if the B-way is in a really weak position, and it's sitting in a vulnerable position, I won't trade it. Like, this is one that I couldn't trade that there, because that day didn't finish strong, and the whole thing stayed underneath that low. I thought, oh, that's still vulnerable. That's kind of McLaren's teaching about structure of markets there, like, building on the staircase, building on top of each other. So that's still I'd want to see that close above that level before I look at it. So you might even sort of see it hopefully burst through here. I mean, ideally, if that was, say, the low there, and then you did your little fallback technique out of here, it would come back up to here. Then it might drift out, make a right shoulder, and then you trade that right shoulder. That's what you're probably.
Then you're trading above the 50-day moving average. You're possibly back over the 200-day moving average. And at the moment, we're still in the declining staircase from a McLaren perspective. We've then inverted that, switched it. Now we're in a climbing staircase and building on higher highs.
Just look at that selling there too, Chris, as well. Like, this is a bit of a Wyckoff thing. If you see that last leg there, there's some pretty solid selling there, each of those down days there. And then it's bounced there, pretty light volume. I mean, the selling, you could say, you argue the selling's dried up here, which it sort of has, but you're still seeing some heavier down days in there. So we're not seeing too many heavy up days. So, I just want to sort of, this might need a bit more time here. So, look, definitely, I've got it on my watch list to watch here, but I'd like to see it get above here first, and then maybe build on top of that. So you almost want it to come through here and then maybe sit on top of that prior high there. So that's often a good sign there. It's like, sort of see how that was the prior high. It bursts through it, then it comes back and retests the high, and then it goes on. So you might want to see this burst through, maybe come back and sit on top of the high. Yeah, but you want to see, it hasn't been any, the volume profile is not saying buy me. It's telling me to wait. So, you just want to see that better. Yeah, but as we know, not every volume profile is perfect. Sometimes they can go up on imperfect sort of volume. So, then the other one I saw was actually tightening up here was that net wealth there, which has reported pretty well. We've seen growth shares have had a pretty couple of days here, Chris, as well. So it had sort of, I think T&E was one of the ones that really reported well. So that's had a nice run. But the net wealth has had that jump, and now the whole thing's tightening up here, which is kind of, normally they jump in and tighten up and then they start to come through. So this is I'm watching this pretty closely. I do have a parcel of this, but I'm looking to add if I see some strength there and trying to add to it. So, because the volume's pretty, chunky volume here, oftentimes that's sort of at these lows there. So,
yeah, interesting.
Well, I'll go now to a question that Gary and I have for those of you who are watching still at this point. Thank you very much for the support. We really want to know what it is that you like most about the videos. So is it going into in-depth on VCPs or going off on tangents about how we would tweak our own trading systems, or going through things like foldback technique in really detailed examples where we can? So please share with us, what is it that you find most compelling and you get the most value out of when you're watching these videos? And we'd love to hear from that. To that end, we say thank you very much, Gary Glover from Novus Capital.
Thanks, Chris.